Hello guys, welcome to my YouTube channel. My name is Yisao Kamaldin and this is the segment of my YouTube channel, the Trade Trends episode, where I come to analyze the Forex market and give you guys the potential trading opportunities in the markets. So we'll be kicking off with the Euro USD. Actually, I we took some losses. I did an analysis in the last Trade Trends episode. I forecast the the I forecast the pair to hit 1.0950 as the first level target and 1.64 as the second level target. But actually, I was I was in the last trade trends episode. We were waiting for the break of this counter trend line, but that didn't happen. Like it's happened, but it's happened very, very quick. So we were unable to get in. Then the markets came back here. So I said to myself, like this is forming like a demand level. So I went down to the daily time frame, to the 1 hour time frame for some entry entry. So I got in right about the candle close of this bullish engulfing candle. Then the market spiked like a little bit. There was a resistance level that so the market spiked a little bit and like went back to hit our stop loss. So I lost some couple of dollars there, but that's not the end of the world. And trading that happens. What we just have to do is we shouldn't let down. We shouldn't let that get us down. Like we just have to come here every time and show up. That's how it is. You can't win every time in life. And the funniest part about life is even that like you lose more than you win, but it is that win that sets you up. So we've won a lot of trades in the back. So when and the loss is inevitable, the loss is here. We have to bear with that and overcome it. So that's it on Euro USD. So what is my decision? My decision now for Euro USD is to just to sit on our hands and watch what the market has to do. But I'm still bearish on Euro USD. Sorry guys. Okay, good. Yeah, sorry for that, guys. So the thing is that I'm still bearish on Euro USD. I'm forecasting it to hit the 1.10500 level. So that's still my overall target for Euro USD. But currently, the market is not doing just that. So what we just have to do is to be very, very patient and wait for the market to commit to us. If it is likely we see a trading opportunity, we are going to jump in. But if we don't see a trading opportunity, it is fine. There's no we don't have to frustrate. If this is not play if this pair is not um playing out or is not forming as we like, we can go over to other pairs like the GPBSD is currently GZ. I will share that with you guys now. But that's just it for the Euro USD. You just have to be patient and leave the market for you to form nicely as you want. And if it doesn't form before it hit our target, we just have to sit on our hands and go over and trade other pairs. There's no reward in forcing trades. Like this happened, we were supposed to enter from here, but the market just spiked up because of the news. And that's it. You don't have any control over the market. You just have to be very, very chill. So that's it for Euro USD. Let me go back to GPB USD. Actually, GPB USD is very, very juicy, and this will be like the pair of the of the day, which is going to save us from the losses that we made in the Euro USD. So what's happening on GPB USD? Actually, let me go over to the monthly time frame and give you guys the analysis on the monthlies. So the thing is that the market was the GPBUSD was in a range since 2017, and it broke out of the range in 2023. And there is a rule about a range is that if a market should range for a certain period of time or the pip count, what I mean is this, what I'm trying to say is this: if the market should range for this height of time, then the market will trend for this height of time too. But if we should look at it, the market is just shy of it. And whenever we are talking about the structured term, if we are talking about structured term, this is a double top, and the market give a lower low, and this is a lower high. So it's either the market come back to give an equal low or a lower low, that will still be very very low to this previous lower low. So that's it about what's going to happen. If the market doesn't give a lower low, it will at least come back to this 1.100 to give a 1.100 to give a equal to give an equal low. Sorry guys, to give an equal low. So that's it on GPBUSD monthly time frame. So I'm just going to go over to the weekly time frame and explain what's happening on the weekly time frame. Actually, I've been bearish on um on GPBUSD from here, but the market isn't just ready. And the thing about market is that when the market is not ready, like what just happened in the Euro USD. When the market is not ready, you just have to calm down, chill, and go and do other things or go trade another pair. There is no, there is no reward in forcing trades. So that's it. And the thing is that if you should do it one time and you were profitable, the market is going to come for you later. It will come for you later. That's just it. So the best thing to do and the best thing the professional traders do is to just to sit on their hands when the market is not working out. So that so like I was saying on GPB USD weekly time frame, I was bearish here, but the market, and it actually gave us one of the reasons why I was bearish is that if I should draw my Fibonacci level from swing high to swing low, this is right on 79.1% Fibonacci retracement level. But and it also gave us a double top, and we broke out of the neckline. So I was already predicting the market to hit this 1.2200, the bottom of the range, but that didn't happen. Like, and you don't have to do if it doesn't happen. We don't have anything else to do. So the market spiked off and give us an high, and this is currently a lower high of the higher high. So what we just and if you guys can see, I'll go over to the daily time frame and show you guys my Fibonacci tools. And if you guys can see, the market is currently at um the Fibonacci 0.618 retracement level. You guys know how powerful it is. I've explained about this how this Fibonacci tool works on here a couple of times. So you guys should check out my last trades episode so you can get to see how I use this Fibonacci tool. And also, I would like you guys to subscribe to my YouTube channel, comment and like so you can encourage me so I can make a lot of videos like this. Yeah, because if I'm recording video and you guys are not giving me like are not encouraging me, it won't motivate me to do a lot of videos like this. But if I should see a lot of subscribers, likes, and comments, I will definitely make a lot of videos like this. I still have a lot of things to share with you guys. I still have a lot of things okay to share with you guys. So that's it. So from the swing low to swing high, this is the market is currently at 0.618 level, and it is moving far away from it. And if you guys can also see, this is a demand level. So this is like two confluence to it, and the third confluence will be, let me go over to my fast time frame. The third confluence is the break of this counter trend line. You guys know that when the trend line is broken, what the market is signifying to us when the trend line is broken, that is that the trend is over. That is, the bearish trend is over. So we are ready to go to the upside. And one thing I've also noticed, that that's the third conference. So for the fourth conference, that's the chart pattern. You guys know chart patterns are very, 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 very essential in the market. They are, if you should see a reversal chart pattern and the neckline is broken, trust me, it is going to work, guys. 99.9% of the time, if you should see a chart pattern and the neckline is broken, it is going to work. Yeah, it is going to work. So I see a left shoulder and head. So I'll just wait for the market to form, to come to the neckline and give us the right shoulder. Then the break of the neckline, then we'll go all the way to the upside. So, but if you are an aggressive trader like me, what the thing is that I'm going to be placing this trade now. When the market is open in the evening, I'm going to place the trade, but I'll be lowering my risk. I'll be if I will be entering this trade with 3% before, I'll be lowering it to maybe like 1% for this trade to commit to me that yes, I'm ready to go all the way to the upside. The only way I can be 100% sure that this market is going to 1.300 is for you to break this neckline. Give us a right shoulder and break this neckline. But then again, in absence of that, we already have about three conference here. Although three conference is good for us to take a trade, but we won't just be risking much. We'll at least leave we have a contingency plan. Sorry, guys, English is hard. Well, so we have a contingency plan for it. So what we are just going to do is that I don't know if you guys would like to trade this with me. I'm going to, once the market is open, I will be placing a trade on this, but I will just be lowering my risk. I'll wait for the market to give us a right shoulder or a break of this neckline. If the market didn't give us a right shoulder like this, like something like this, if market didn't give us a right shoulder like this is what I'm expecting the market to do. But if that didn't happen, this is what I'm expecting to give us a right shoulder break out of the neckline. Then retest on the neckline. We'll be entering the trade. We'll be capitalizing on the trade. We'll be stacking. Like you guys know how we do it. We'll be adding to our position. We'll be capitalizing on the trade. But before we do that, we still have to chill for now. If you be entering this trade, you have to lower your risk. But so like I was saying, if that didn't happen, if the market didn't give us the right shoulder, if it just broke out of the neckline and came back to the test back on this 1.2820, then we are still good to go. Because if you are talking about the structured terms, this is like this was like a break of structure because this was the last high. This was the last high. So if the market should break through the last high and came back to retest on it, this is like a break of structure, then retest, then we'll be good to go on the upside. By then, I'll also come in here to hold you guys and see maybe another conference that will like that can still add uh, to this, so we can be a lot confidence to capitalize on the trade. Because some people, if they don't have enough confidence, like a lot of confidence, they won't be confident in they won't have the confidence in themselves to take the trade. But so what I will just, whenever I see another conference, I will come here and explain to you guys so I can hold you guys hand. Then before we can, so we'll be able to trade this all the way to the upside. So that's it on GPB. This has taken a lot of our time. So I'm just going to go over um, just one more pair, then we'll see what next we should do. And then we'll actually call it a day on here. So for this trade trends episode, but during the week or maybe next weekend, I will release another trade trends episode and and give you guys an insight about what will be happening in the markets by then. So let me go over. Which other pair should you analyze? Actually, let me go over gold. Go- So what actually happened was that on gold was that um let me go over to the monthly time frame and explain from there. Gold is in no man's land, as you guys can see. The market has not traded that in this before. Uh, and this is because the actually the spike in gold here is caused by the weakening in dollar. You guys know whenever the dollar is weak, gold is rising. Gold is rising. As I watched a podcast lately, and the man was explaining that how about gold was in um 35 35 30, like I don't know how it is calculated, but as you guys know, this is 2424 is like that's for I think for a dollar. What I was just trying to say is that when gold was in $35, that was still in the 90s before I was even born, because you guys know I am an 18 years old trader. I was born in 2005. So before I was born, that has happened. But what I'm trying to say is that whenever the dollar is working, the gold will rise, because you guys know the gold is the safe haven access for the world. So whenever a crisis is happening, or the US dollar economy is bad, the gold will get to rise. So go, and you guys know the US economy hasn't been great like for months now. It is not the dollar that we used to know. And that's the problem we are having with Euro USD and GBP USD. You guys know I've analyzed this on the monthly time frame. The market is still bearish, but the reason why we are not like the temporary it we are not bearish temporarily is because of the dollar index. The dollar is currently weak. That's what's happening, and that's why we've had a lot of a lot of a lot of volatility in the gold. So the reason how I was able to analyze the gold is that you guys know, like I said the other time, when the market is ranging and the market broke out of the range, the market will trend for the same amount of time that it used to range. So what am I trying to say? Let me explain to you guys with graphical explanation. So this is what I'm trying to say. You guys know this is the amount of time that the gold used to trend from 2020 to I think about 2024, early 2024. So the gold broke out, and if I should place it on here, you guys can see. If I should place it on here, this is the amount of time that the gold we used to we used to trend before it enters the range again. It is just like a priced in and priced out. That's what the fundamental traders used to like. The time that the fundamental traders use, it is called priced in and priced out, and the technical traders call it when the range breakout strategy. So whenever the a market is ranging, if it should break out of that range, the market will trend for the same amount of time that it used to range. So definitely you should be expecting um the 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 gold to be around the 2069 and 2600 in the couple of years, maybe like in a year or two or more than that sef. I don't know. I'm not the market, but I'm just from my own perspective and from what I've analyzed, this is what I can say about the gold. The time we don't have time to actually analyze more than like break it down to the lower time frame. But this is what I can say for gold. The next level target is 200, 2600. So in our next three trends episode, I'll get to analyze on the lower time frame, on the daily time frame and 4 hours time frame, and how you guys can jump into the trade and get to profit off it. So that's it for today's Trade Trends episode. Please comment, like, and subscribe to my channel, and I'll get to give you guys more videos like this. Bye bye.